Economists surveyed by the Monetary Authority of Singapore have lowered their forecast for Singapore's GDP growth. Now, they say that the economy would expand by 0.6% this year, down from the 2.1% in the previous survey. It's the second time that they've lowered their forecasts for this year. The downgrade comes after second quarter GDP grew just 0.1% on year, and that is the slowest in a decade.
The potential escalation of the US-China trade war, along with a further slowdown of China's economy, are the top risks to Singapore's economy, according to the private sector economists surveyed by the central bank. Geopolitical factors in Hong Kong and the Persian Gulf were also widely cited as a downside risk. The downgraded GDP growth forecast is still within the Trade and Industry Ministry's 0 to 1% estimate.
So this is a reflection of small Singapore being very exposed to the global economy itself. So unless we see a turnaround in prospect outside of Singapore, we'll probably see that the pressure on the local economy will continue to persist. Our only worry is that the manufacturing weakness we are seeing in some key industry may spill over to more on the services side.
The median forecasts were also lowered for nearly all macroeconomic indicators. Non-oil domestic exports are forecast to contract to negative 9.2% compared to the previous negative 2.1% expectation. The finance and insurance industry could be a bright spot, with forecasts being revised upwards to 4.3%. Despite the slowing economic growth, analysts remain positive about Singapore's prospects going forward.
Overall, we still see job creation primarily on the services side still. Yes, within services, trade-related, trade-oriented type of service activities and jobs have been affected. But if we look at the rest of the economy, it's still fairly resilient. So that's an encouraging bit.
What is optimistic to hear really is the fact that into 2020, growth and inflation is likely to pick up, according to the report, and that could actually mean that there could be some respite that could be seen from the US-China trade tensions into the next year ahead.
Economists are forecasting overall inflation at 0.7% and core inflation at 1.2%. Looking ahead to 2020, GDP is expected to expand by 1.6%, down from the previous 2.3% estimate.